Happy Tuesday. Today's Tuesday. Yes. Apologies for joining a little bit late. We were actually testing a new software. We actually had a new software, but for some reason, it just kept on uploading and we never went live. So we decided to just come back to the YouTube software itself, and we are online and now. So I see a couple of people tuning in. So just to make sure that you can hear me clearly, can everyone type a 1 in the chat box just to let me know that everybody can hear me and see me the right way? Fabian, hello, Fabian. Can everyone type in a 1? Can you hear me well, Fabian? Arthur, Oscar, perfect, 1, awesome. All right, so welcome. This is actually my very first live on a weekday. So I'm very excited to test how this goes. Like I said, originally the intention was to go live exactly at 12 today, but we were testing a new software and things did not go as planned. So we reverted back to the old school ways, and we're now here in the live with all of you guys. So again, this is the first time I'm doing a live on Tuesday. So we decided to try something different. We did not send out emails beforehand this time because I wanted to base it on first come, first space. So I'm going to go ahead and open up the floor for any questions you may have. I'm sure there's plenty given everything that's going on with the coronavirus, with all of the flexible work arrangements going on and all of the announcements in the news of the Fed lowering the rates and everything that's happening with the stock market. So I'm just going to open it up and feel free to ask away. So in the meantime, I see some people typing in, but while those questions actually get through, so I'm just going to go ahead and give a quick recap. And that way I let some time for the messages to start flowing in. So as you know, starting sometime last week, the week of March 9, we've been hit with, let's say, just a ton of surprises with the changes in the stock market. We experienced a couple of circuit breakers in the stock market as a way to prevent any panic sell-off. So for those who don't know what circuit breakers are, I actually released an episode last Friday talking about exactly what has been going on in the market back then. This was before the coronavirus was declared a pandemic. And now that it's a global issue, we are now seeing that it impacts more than health in itself. So we're seeing the ripple effect happening in pretty much everything in the economy. So we're seeing changes in the stock market. Some small business are starting to experience changes, downside changes, because people are actually afraid to go out. A lot of people are placing themselves in self-quarantine. A lot of employers are actually encouraging their staff to actually work from home. So foot traffic in itself in different stores or restaurants are actually decreasing. Also, that bend, a couple of states are actually announced that now certain restaurants are going to be out and open solely for the purpose of handling takeouts and not exactly serving people and their establishments, and efforts to prevent the virus from expanding. And basically, I was just actually taking a look at this morning's news to see if there's anything that has to be said or anything that is related to the real estate market in itself. And it seems that everything is still a little premature to sort of like determine what's going on. So what's interesting about it is that typically, in this case scenario, so for example, we are entering, well, it's mid to well, mid-March, I'll say, going towards the end of March. Typically, the spring season is actually a good timing for people to go out and buy houses because, it's just this is the perfect timing of the year. The weather is getting warmer, people are getting their tax refunds. So there's a lot more liquidity in the households. But given everything that's going on, again, people are taking precautionary measures as opposed to, just wildly going out and just, check out houses, right? And it seems that not all states are actually impacted the same way. For example, Seattle hasn't been experiencing any slowdown in the real estate market because people are still going out and, checking out open houses and stuff like that. And with the recent announcement of the Fed lowering interest rates, I know for a fact that the volume has increased and the number of requests or applications for mortgage refinances because people are looking to, either reduce their monthly mortgage payments or maybe save a couple of bucks due to that refinancing. But what's interesting is that now, based on what I've been reading in the news, is that even though the rates are being lower, the supply of the houses is not, going up. So if anything, the supply of houses hitting the market is actually decreasing. So it's interesting to see what's going to happen next. We already see what's happening in the stock market, but the housing market doesn't move as quickly as within the stock. And regardless, of what happened in the stock market, we're not seeing a major impact. Although there are some sources, like for example, the Financial Times, that have been announcing that according to a Google data trend exercise that they've been performing, that apparently there's a potential for a housing market crash. But again, it's still a little premature to sort of like determine what could happen. Like we can't really predict what can happen in the market. What we can do is to stay informed and then basically just adjust as we go. So I have David Kelly. Hello. So how would all of these events help her getting business credit? That's very interesting, David, that you asked that question, because I know recently, I think it was yesterday or the day before, the Small Business Administration actually announced that there will be loans provided to small businesses to sort of like help them through this tough economic times, because once again, these businesses are experiencing less foot traffic in their store, less people actually wanting to go outside. So sales are hurting. At the same time, all of these businesses, they have fixed costs that they have to take care of, meaning rent, utilities, and at the same time, they also have workers and staff that they need to pay their salaries. So I can actually share the link. One of the many reasons why I was testing the new software was because I wanted to share my screen, but unfortunately, it's not running properly. So what I can do, I can share the link with everybody after the live to the Small Business Administration website. You can actually check out the announcement that they made and the states that are actually eligible for the SBA disaster loans, in this case for the coronavirus. And you can, in fact, take a look at it and see if your business actually qualify. What kind of requirements are needed in order to qualify? They were not very specific on the website. So all I know is that they are cities within certain states that do qualify. So you will definitely have to reach out to the SBA and find out yourself to see what is it that you need to do in order to get access to those loans. There's a 1-800 number and the website as well, and there's also an email from the SBA that you can actually reach out and have access to that information. So I have Fabian here. David, hopefully that answered your question. David is actually one of my students, so I'm actually really glad to see him join us today at noon Eastern time. Not sure what time is over there where you live, David, but thank you for joining. So I have Fabian Martinez. Fabian, are you expecting to deal with your tenants not paying the rent because they might be laid off from their jobs in this unfortunate work crisis? So that's actually a very good and interesting question. To be honest, I don't even know what to expect because I recently had a live on March 8th with my students, and if anything, we talked about the possibility of this happening. To be honest, I didn't really think it was going to happen this fast. I thought it was going to take a little longer before we got to that point, and it was literally in less than 24 hours. Things could happen. Now, it is likely that some of my tenants might not have their ability or won't have the ability to actually pay for the rent. I think at this point is kind of like a 50-50 because once again, we are in the middle of tax season. So for those families who already filed the returns, there's a possibility that they might have gotten access to their return at this point. And if for whatever reason, some people do get laid off, they will still have funds available to help them get through the tough times. I'm not entirely sure if the businesses are going to start laying off people. I try to find some articles, some pieces of news that could actually talk about that. I'm not entirely sure. I can't really predict that, but what I do know is that the banks, lenders, the SBA, they are stepping up the game and they are offering loans to keep the economy and to keep these businesses going long term. But again, I've talked about having exit strategies. I've talked about having backup plans or mitigation plans to help you in the event that something like this happens. So, for example, I do have insurance that actually covers loss of rent. So in the event that I do have to experience some vacancies or anything to that matter, I can always tap into the insurance. And at the same time, I also have additional funds as part of the measures that I always take just to be on the safe side. So I'm sure that some of you might have experienced that at some point during a closing. Typically, what banks request you to do is to hold up to 3 to 6 months of reserve funds. That depends on the banks because the banks actually know that events like this could happen. People could lose their jobs. Maybe there's a major recession that happened, maybe a pipe broke and need to fix it. So they do require you to have to take care of that. And so that's basically what I have set in place just to, protect my portfolio. And I guess we'll just start taking everything one step at a time. So one thing that's interesting about everything that's going on is that, for example, with the stock market or with the housing market, you sort of like see that happening because there's a pattern, right? So, for example, in the housing market, the prices of the house, they gradually started going up, and then it was a matter of time, right? What goes up and must come down. And but this time, it was due to something that was external. Like there wasn't anything that was happening within the stock market or within the housing price. This is something, a virus that just happened. Well, I wouldn't say out of nowhere, but it started off in China and then it wasn't contained, and now we're in a world pandemic. So it has a ripple effect, and so I'm just as surprised as everyone is, and I think the best thing that I can recommend everyone here is just to stay as informed as you can. Take some things with a grain of salt because at the end of the day, journalists are people, whoever is communicating the news are people, and it's very hard to say that some people might not be biased towards certain news. Like, for example, I was reading an article this morning in Redfin where they survey a couple of investors, and then they were asking questions about what do you think is going to happen to the housing market, right? And so 40% of people responded that it's going to go downhill, that the housing market is going to crash, and then the remaining 50% responded that there wouldn't be any changes, and then the remaining, I think it was like 8%, had nothing really to say. Right. So it turns out that of the 40% of respondents that said that the market, the real estate market was going to go downhill, turned out to be the same people that were already investing in the stock market. So these people are already feeling the pain. They're already seeing their investments go down. So it's just only a matter of time before, the pessimistic way of thinking trickles down into other investments as well. But turns out that the ones who didn't really invest in the stock market, they are feeling that, hey, nothing is going to change. So at this point, it is very difficult. I think the world, quote unquote, is sort of like divided as to whether a market crash is coming or not. One thing I can tell you is that I don't think the prices of the houses are going to go up now. But again, that's just my personal opinion. One thing I know for sure is that the rates are going down, and well, they are already at the lowest point possible. So if you have a mortgage that still, you still have a long time to repay and you are considering refinancing, maybe this is not so much of a bad time to refinance. Maybe it's something that you should consider doing. If you can afford to do that, keep in mind that with a refinancing, it's, going through a mortgage all over again, right? So you have to provide your pay stubs, you have to provide your taxes, and you have to also be mindful of closing costs, which could range somewhere between 1% to 3%, sometimes even 4%, depending on the lender that you are dealing with. But I know I actually mentioned something like this in a prior episode, and one of my viewers was actually extremely concerned because he was asking, how could I be recommending people to go refinance what they don't know whether they're going to have a job or not in the near future? And I have a different point of view on that sense. So let's say, for example, if I am afraid that I could lose my job somewhere down the line and my mortgage payment is, I don't know, I'm just throwing a random number out there, $2,000, right? And if I have the opportunity to refinance and lower that mortgage payment to, I don't know, maybe $1,500 or maybe $1,200, I will definitely go for that, because would you rather have to be, feel responsible for having a mortgage payment of $2,000, or would you rather a payment of $1,200 or $1,500 thanks to that refinance? Now, again, keep in mind that with the refinance, you might have to incur some expenses, and you also have to consider how long you're going to stay in that property yourself to see if you can actually recoup the amount of money that you are paying for that refinance. But ultimately, I can't really tell you guys what to do. It's more of, you getting yourself informed, hearing different opinions, staying on top of the news, and then evaluating your own financial position and see, okay, can I really afford to do this? Or should I just hoard the money in the event that something goes wrong, imminently? And that's something that we don't know. And just I think just stay on top of everything. It's the best advice that I can give you. Only you know better what you're standing financially. So it's a little quiet here. I'm not sure if I'm not getting any questions through, or if you guys are only just listening to me at this point. But please feel free to ask away any questions that you might have. I could definitely share the links in the description after this live it's concluded, so that way you can actually read the same news, the same articles that I've been checking out. Again, at this point, everything is 50-50. We don't know if there's going to be a housing crash, but once again, things don't move as fast. So if you're planning on buying and you're considering buying or investing in real estate at this point, just be mindful that the rates are low, and maybe this is a good timing for you to finance, assuming everything else checks out in your financial situation. So I'm going through some of these comments. Jose, hi, good morning. Anyone else has any questions that you guys might want to ask me? And then while you do that, I'm actually going to skim through a couple of articles here while I wait for some questions to come in, and inform you guys to see what else can be expected. So let me see. So another piece of news that I found very interesting, just like I said, that let me see. Marriott is starting out to furlough what expects to tens of thousands of employees without pay as hotel close. Like I said, so the changes or anything that's happening today, impacts the markets in a very different way. Like I was mentioning earlier, I was reading some articles in Seattle, and it seems that everything was going fine over there. But here, I found another article about Houston, Texas, and how all commercial properties are being impacted by the changes on the prices of oil and gas, and then including the stock market. So I think every market adjusts differently. Some things are locally impacted while others are nationally impacted. But I don't want to sound like a broken record, because I wish I had better answers for you guys. But at this point, everything is just, we're sort of like standby and just looking. But the one thing that I can say is that I'm definitely considering refinancing to my mortgages. I'm actually working already with one of my mortgage brokers to see if that's even an option at this point, because it seems that it's something, an opportunity in this case, that I definitely don't want to pass on if I have the chance to reduce the interest rates and those mortgages, so I can increment my cash flow. So let me see. Does anybody else has any questions for me? And in terms of what's going on, or it doesn't have to be about what's going on in the market. You can definitely ask away questions about videos that you've seen in my channel, or anything that's related to LLCs or business credit or even personal credit. William Vallegos, hi Lucelia. Thanks for viewing. Greetings from Berlin. Hello, how are things over there in Berlin? Hopefully contained and not as bad. Thank you for the thumbs up and for the support to the channel. Again, if you guys have questions, it can be any question. It doesn't have to be related to everything that's going on right now with the market in terms of the coronavirus and the stock market. If you have any questions that's related to your investments that you would like to get some clarification, then feel free to just ask away. So, okay, what is the APR for buyers and refinancing? So I don't know that on the top of my head. That's something that you're gonna have to discuss with your lender. So I will really suggest you to ask. All I know is that the Fed lowered the rates. I don't remember what's the prime rate today. So the prime rate today, let me just quickly do a quick Google search, is down to 3.25. But again, whatever rate you get approved, that will depend on a bunch of different things, right? So depend on what the rate the bank is offering, is also depending on your financial curriculum. I think that will be the best term, meaning how is your FICO looking? What's your debt to income ratio looking like? How much are you actually making? How much equity you have in your property? And then how much of it are they willing to lend you against? Is it an 80 LTV, meaning 80% out of it? Or so that's something that you definitely will have to reach out to a lender, whatever lender you have in mind. One thing I always recommend everybody, as opposed to you going to the big banks, meaning the Chase of the world or the Bank of America of the world, try to see if you can go to a credit union or one of those local banks within your vicinities, because they tend to be governed by a different set of rules. And then their goal, I mean, yes, banks are in the business of making money, but their goal is to serve the community. So they will look into your entire situation, the overall, and see what's the best solution for them. And typically, in my experience with bankers, if they see that whatever products they have in-house are not a good match or not a good fit for you, they will actually recommend you to someone or to a competitor or to a different bank that could actually maybe provide you with what you're looking for. Because ultimately, the goal is to help the consumers, not just to rip people off, as opposed to popular belief. So let's say Abel. Hi, Lucelia. Hello. I would like to know how we can convince the seller if we're considering that her house is cheaper than the price published. I'm not entirely sure what you're asking. I'm gonna see if I can take a wild guess here. So what you're asking is, let's say the asking price of the seller is 200,000, and then what you are trying to tell the seller is maybe their house is not worth 200,000, that it's perhaps worth 150,000 or something like that. I think that's what you're trying to ask here. If that is the case, I will, one, look at comparables of other places that have been sold. And by comparable, I mean it has to be the same square footage, it has to be the same number of bedrooms, it has to be similar in terms of upgrades, so to speak. I mean, it has to have the same nice kitchen or like not so nice kitchen. It has to be, as the term will say, comparable. And if based on what you're looking for, you're saying that, hey, this is not worth what you're asking, because look at the latest prices of properties that are of similar qualities. You're asking way too much money, or you need to renovate the kitchen just to bring it up to market standards or market conditions, or maybe there's molding in the house or something that you need to take care of. So then you will run the math and then show them, look, it's going to cost me this much to make the repair. Either you make it or I can make it. But if I'm going to be the person making those repairs, then you should definitely lower your price to this much. And that's how you can go ahead and negotiate. But I think the key here is to have facts, to have numbers and data to help you back it up. Otherwise, it would just simply be, a conversation full of back and forth. I think this is worth this much. And then the seller's going to think, well, it's my house. And obviously there's sentimental value attached to it. So therefore, I want the most I can get out of the market. So if you can have access to market comparables, you can get those. You can actually buy those. I think the site, it's neighborhoodscout.com, or you can just simply work with a realtor who can get you a copy of those comparables and just take it from there. So hopefully that answered your question. So I have Walter here. Do you know of any lenders that provide HELOC with credit challenges? Again, I don't know, or I don't have a list of HELOC lenders at the top of my head, because every lender has a different criteria. And even if I were to know some lenders, their criteria is changing as they fit, as they see fit, or all the time. Like I really have no control over what they choose to do. Like, for example, this morning I was reading an article about credit card companies, right? And how a lot of travelers are looking to change or cancel some of their flight itineraries, some of the reservations, and they're having a hard time getting their money back from the credit cards, especially those who actually purchase their plane tickets with points, because now they're concerned because they don't want to expose themselves to the virus. And at the same time, whatever vacation plan they had beforehand, it's not happening, because establishments are actually closing down and they're not accepting any customers or any traffic coming in to whatever is it that people are buying or reserving. So the article actually talked about how banks are handling with those customers. They're handling customers are requesting their refunds, and at the same time they're changing the rules as they go, as they see fit, to see if there's a way to actually either not issue those refunds or just keep the money in house and then issue additional perks so that people can reschedule their vacations down the road. So again, it's one of the many articles that I wanted to share today, but unfortunately the software did not work as planned. So hopefully for future lives, I should be able to share my screen. But I do promise you that I'm going to list all of those links to those articles below in the description box. One is published in the channel after this live has concluded. And I'm also going to list those links as part of the comment section so that everyone can access those as well. But to your point, I think, Walter, the main thing that you can do if you are unsure that the banks are going to give you some sort of HELOC or not is to, just print out a copy of your credit report with the score and then just walk into a branch and see what they can do for you. Just share them a copy. Hey, please don't pull my credit. I'm just shopping around for rates, just shopping around to see what you can do. When you go into the bank, please, please, please don't be like one of those people who walk into the branch empty-handed unattended, not knowing what to do, expecting people to tell you what to do. What you should do is to do the proper diligence as to, gather as much documentation as you can. So for example, if you already went through a mortgage process, because if you're asking for HELOC, chances are you already have your primary residence and that you own it and you're paying a mortgage on it. So you have been down this road before, right? So that means you should bring copies of your credit report. You should bring copies of the last 2 pay stubs. You should bring copies of the last 2 years of worth of tax return, so that you can make it easier on either the mortgage broker or the banker in itself, so they can evaluate your situation and then see, okay, well, according to your score, based on what you're giving us here, our preliminary answer is no, we cannot help you, but we think this lender may, and they will send you off to someone who can help you. Remember, real estate is a relationship-based business. So if one lender sees that they cannot offer you the product, that it's a good match for you, they will send you to someone else who they think can help you out, because ultimately the goal is that they expect that if their competitor or if their peers are handling a customer that they cannot help out, that chances are they will hopefully send that customer back to them. And that's how people do business, right? They do it through referrals. So just make sure you gather everything, you have all the necessary paperwork just to make things easier, not just on the banker, but yourself, right? If you're taking a full day to go out and shop for HELOCs, then you want to make sure you can make the best out of your day. If you visit one branch, then they can help you. You go ahead and you quickly can move on to the next branch, as opposed to you going and information gathering, trying to figure out, okay, what is it do I need, so you can start considering me or be able to tell me what I can get or what I cannot. So hopefully that can help out in answering your question, Walter. I see D, she put D. Wait, let me just see where. I see a couple of emojis there. Yes, stay protected. You already know the gist of it. I'm not going to repeat myself as to what you guys should do to stay protected. Just be cautious out there. Any additional questions? I see more people joining now. Perhaps some of you guys are playing catch up, watching the earlier content. But for those who are here already and have additional questions for me, feel free to ask away. Let me see, Francisco. Okay, I just want to let you know that you're having helped me a lot. Thank you. Okay. Thank you, Francisco. I'm really glad I was able to help you out. Anything else? Has anyone else actually have additional questions that I can help you guys answer? And let me see. While I wait for additional comments, let me just quickly skim through some of the articles I originally had set in mind to help you guys. Let me see. Real estate topics. Coronavirus, I already talked about that. So Google data. This article is really interesting, but I will definitely put this in the description down below, so that way you guys can check it out. Let me see what else I have here to share with you. I think I pretty much cover everything. Oh, I mean, I do have something in additional to what I've talked about, and it's meant to be a contrast to sort of like lighten up the conversation so that everything doesn't sound too depressing. And the good note is that not everything is going all bad, because opportunities, they do rise from everything that's happening. So for example, Amazon yesterday announced that they plan on hiring about 100,000 workers to meet the demand of people who are placing a lot of household orders online due to self-quarantine and people not wanting to have physical contact with other people who may or may not be exposed to the virus. So that just goes to say that opportunities are actually created everywhere. And yes, Amazon is the one that's creating that opportunity, but at the same time, it just serves to saying to help you all to see that, hey, in spite of something, there's always a chance for you to create a new opportunity and just have a better or a positive lookout in spite of everything that's going on. So I see a couple of questions flowing in. So I have David. Hi, is it a good time to reach out to Fund and Grow or Patch of Land or even hire a money lender in anticipation of a rise in inventory? So, Scott, it's always a great time for you to reach out to Fund and Grow. For those who have never heard about Fund and Grow before, it is a done-for-you service where they help you apply for business credit. So if any of you are small business owners and you're actually afraid of what might happen to your business due to the slowdown of foot traffic and people wanting to stay in self-quarantine, Fund and Grow allows you to get access. They help you get access to business credit, and these are business credit done through business credit cards. So you have a very high chance of qualifying for 0 APR or 0% credit cards, and they offer usually stands for, I will say, depending on the bank that you're applying for, 6, 9, 12, sometimes even 15 months at 0%. So that should provide you some access to liquidity so that you can, once again, take care of fixed costs such as the rent. If in the event that you're wondering how you can actually pay your rent using business card, there are services called plastic or manual payments that can help you process the rent payment and have that taken care of without you having to worry about not having enough access to liquid cash. At the same time, you can actually pay your stuff using those credit cards as well. And all you have to do is just process that payment using plastic or manual payment as a platform, and then you issue that paycheck to your staff. So you can definitely check out that. I know David also asked questions about Patch of Land. So Patch of Land, they specialize in commercial mortgages. So for those who are interested in going out and qualify for loans, you can definitely check out the site. I will leave you the link down below to a video where I talked about the services from Patch of Land. So David, I think all in all, they're not stopping anyone from requesting loans or lending. If anything, this is your time to go ahead and request those if you're planning on moving forward with the investment of your real estate portfolio. And same thing with hard money lenders. So I'm not entirely sure where you're coming from with that question, but hopefully I was able to help you answer this. So if you excuse me, guys, 1 second, I need to get some water. So G Street, hello, nice to see you. Hi. I'm currently flying on a plane, so you might have answered this question already. Is this current environment, would you consider it challenging to get funding for new properties? I think it's a little too premature for that. All I can tell you is that banks have been swamped with mortgage applications. I did mention that a little bit earlier, where I'm actually considering refinancing 2 of my commercial loans, and I was talking to my broker, and he in fact has told me that he's been swamped with work due to the overwhelming number of applications. So it certainly is not stopping anyone from pursuing a loan. So if you are looking to do that, I think now is the time. You might get a little bit delayed depending on how fast banks are hiring additional staff to help with the mortgage processing. But if you had your eyes set on a property and you're ready to give it a go, then this is your time. Like the rates are low, and I don't see why they wouldn't be applying for, they wouldn't be approving you for any loan, especially if it's commercial, because it's based on the income of the property in itself and not on your personal income. So hopefully that answered your question, and safe travels. Stay safe on the plane. Let me see. Walter, what are some of the best programs out there to acquire investment properties that you know of? I'm not entirely sure what you're asking. It's New York City, so we have an ambulance going through, so apologies for the noise. Walter, I'm not entirely sure what you're asking. Are you asking of a website to look at properties? Are you asking for real estate courses? What exactly are you inquiring about? So if you can please clarify that. Kenny, I'm wondering the same thing as Walter. Kenny, investment properties? Because Walter did ask a couple of questions. So if you can please qualify. Lenders. So there's a website. Give me 1 second. Can you please block this person? It's using profanity, so I don't want him in my channel. You can go ahead and have fun elsewhere. So, Walter, there's a website that it's called scotsmansguide.com. So that's a one-stop shop for you to find lenders from all across industries, whether you're looking for residential loans or commercial loans. And they also serve in all 50 states. So you can actually look up the different lenders that could serve in your area, your type of investments and stuff like that. So hopefully that it's helpful. And let me see, anyone else has additional questions? We have 15 minutes left on this call. Walter, I will make sure I'll include a video in the description box down below, so you can definitely check that out. And hopefully that will help you find that lender that you're looking for. But if you're completely unsure, I highly recommend you to, just do on the search. It's actually good practice for you to visit a branch within reason, right? Because I know everyone, it's a little nervous with everything that's going on. Just take the usual precautions that are needed to protect your health. But once again, real estate is a relationship-based business. So you don't really lose anything by walking into a branch and asking those questions. I know that for some of you, it could be nerve-wracking. I mean, I started off as well somewhere, and the worst that can happen is that they will say no. But so what? You just walk out of that branch and you make a note to self as to what not to say, or maybe how to improve your way of asking questions, or maybe your way of presenting yourself. Maybe the reason why they said no is because you were missing a piece of document that was important in that decision. So now in your next visit, you make sure you bring it along and you just go and visit a different branch. The fact that one branch is saying no to you does not necessarily mean that other banks are going to deny you or other banks are going to say no. Banks, they have quotas that they need to meet. Let's say sometimes, for example, if you're walking into a bank and they already exceeded the number of mortgages that they were allowed to give out to people, and then all of a sudden you happen to walk in and you get denied, it's not on you. It's not personal. It's just simply a set of rules. They exceeded their quota and they cannot lend you at that point in time. But if you go back the following month, you might get approved. Or if you go to the bank next door, perhaps they haven't even hit that quota yet, and that's why they're able to lend you something or whatever it is that you're requesting. So never take it to heart. Don't think that it's an act against you. We all start somewhere and we all learn somewhere. What's important is that you show up prepared, and believe me, lenders, they do value that. They do value someone who's prepared, and they don't want to see someone who's just showing up and asking questions. I mean, they would, but you want to definitely maximize that visit. You don't want to just show up empty-handed and just kind of like cross your fingers and hope for the best to happen, right? Let me see, Francisco Penelosa. Would you be able to do this in Spanish? Because I know you have subscribers like me. Yes, my live in Spanish is at 1:30. So we're going to end this exactly at 1, and then I'm going to give it another try to the software to see if maybe this time we get lucky and I can hopefully share my screen and share those articles with everyone. For the ones that are on the call right now, I truly, truly apologize. We invested in the software, and apparently it has a lot of good reviews, and we were really, really looking forward to it, to, having the ability for you guys to see me and at the same time walk you guys through everything that I was able to pull up this morning, just to keep everyone as informed as possible. But unfortunately, it didn't happen, but hopefully next month things will be different. So anyone else? We have 12 minutes left, so feel free to ask questions away. Feel free to ask away. Sorry, it's a little hot here because I have the studio lights hitting me, and it's pretty warm in here. So anything else? Let me just scroll up and make sure I didn't skip any questions by accident. Let me see. Do you know of any mass HELOCs? Dean, David. No, I think I pretty much have everyone covered. So we have 12 minutes left. Please let me know if you have any additional questions. In the meantime, what I'm going to do, I'm going to refresh my news page to see if something new comes up. Polling season. All right, let me see. I think a new question came in. So let me see. Francis X Regis. Hey, I have a question. If I use a credit card to gather a down payment with Venmo, how would the debt to income affect the qualification process? That's a great question. Think of it this way. Let's say you have a bunch of credit cards and your total line of credit with all those credit cards is $10,000, right? So you have $10,000 total line of credit and you are deciding to leverage some of that money to, purchase real estate as part of your down payment. All you have to make sure is that whatever you're pulling out does not exceed the 30%. So in your case, Francis, assuming you have a $10,000 credit line with all your credit cards, is that you shouldn't be pulling anything more than $3,000 out of it. So hopefully that should answer your question. And I'll make sure I add a link also to another video where I actually talk about that in more detail. And hopefully that will help you out. One thing you have to keep in mind is that depending on the banks that you are working with to get approved for that mortgage. Some banks require fund seasoning, meaning they expect to see a certain amount in your bank account for a certain period of time. Some of them require to see it for a month, some 2, some even up to 6 months. So before you even do that, you should really, really check with your lender as to what the requirements are. And one way for you to find out is when you see the requisite of the that list that they give you. Typically you will see what they ask for, right? So usually 2 years worth of tax return, 2 pay stubs, bank statements for the last 3 months. So that's your cue for you to know that, okay, they expect to see 3 months and they expect to see that the money is in your account for the past 3 months or something like that. Yes, from credit cards. Francis, so if I make $35,000 a year and I use 10,000, is that good? No, I think we're getting confused here. The debt to income ratio. Oh, I see what you're asking. The debt to income ratio will depend on the lender. I think there's a video I released a couple of months ago that talks about that. And the title of it was, Why Was Your Mortgage Denied? So I think the debt to income ratio, all I know is that banks are willing to lend you 3 to 4 times your annual income, and that your debt shouldn't exceed somewhere between 30 to 40%. So I don't remember the stats in the top of my head, Francis, but I will make sure that video is also included in the description box below so you can take a look at it. So, but if you want to check it out right now, you can definitely look it up. It's called Why Was Your Mortgage Denied? So I'll add that here and make sure you get that, because I don't want to say something that is inaccurate. So I'd rather you check out that video because it's right on the air. I don't remember the details in the top of my head. So I'll definitely get that over to you. Let me see. So 12:52, I have 8 minutes. Sure. So I have 8 minutes left until we hit 1 p.m. So let me know if any of you guys have more questions. If not, feel free to just make a comment down below and I will check it out sometime in the future and see if I can create a video to cover that question that you asked. I'm going to quickly skim through the news page just to see, to make sure if there's something new, something else that I haven't covered. Let me just do this really quick. US stocks gain in volatile trading, dollar surges. So nothing has changed so far. Everything remains the same, except for a recent article about Marriott and how they're shutting down their hotels due to the coronavirus outbreak. But other than that, there's nothing new. I will give it a couple of minutes, but if I don't see anyone else asking questions, I'm going to go ahead and conclude this live. So I'm going to give it 2 more minutes. If not, then I'll go ahead and end this and try to prepare for the Spanish live. So for those who are Spanish speaking or bilingual, feel free to join me again at 1:30. And once again, hopefully the software will work better by then, and you guys could get all of your questions asked and answered. So I think that's pretty much it. It's about to be 12:55 unless everybody else has more questions. I already checked some of the news and I don't see anything new that I haven't covered earlier today. And I will make sure you all have access to those links so you can check out those articles yourself and stay very well informed. And again, do not hesitate to ask questions to your lender, to your bank, if in the event you want to check that out. Let me see. What's your opinion on infinite banking? Hector, actually, I released a video not too long ago, I would say about 2 weeks ago, about infinite banking. So you should definitely check that out. I'll make sure I will include that in there. I think it's great as long as you are disciplined and you manage your money responsibly and you pretty much set a budgeting plan and you tackle everything, all of those steps, all of those goals to get that mortgage taken care of and paid off quickly. So hopefully that will answer your question. Hector, I will definitely make sure you get access to that link so you can, that way you can watch the video in its fullness. So Danilo is asking a question in Spanish. I am going to go ahead and try to translate that for the benefit of everybody. Danilo is asking how much cash should you set aside every time you get a paycheck? That will be entirely up to you guys because I'm not sure what you can afford to set aside. I know that the golden rule, what most people typically recommend is to set aside 10% of your income. So whatever amount that you receive in every paycheck, you set up 10% and you don't touch that. And that's money for your rainy days, right? For some people who are more comfortably, they can set aside 20%. But that's just sort of like a general suggestion. I know not every household makes the same amount of money, and I don't want to sort of like force someone to set 10% aside when in reality you can only set a set of 5%. So I will say any percentage should be okay as long as you know you can afford to put that aside. What I don't want people to do is to set 10% aside and then every chance they get just dipping their hands on it and taking money out. That's meant to save you for a rainy day. So hopefully that answers your question. Danilo, we have a 1:30 call in Spanish, so feel free to join and I'll be more than happy to answer that question in Spanish, but this is the English live, so I have to keep everything in English. Does tax deductions affect your approval odds? I'm not entirely sure what your question is coming from. Tax deductions is something every business should be entitled to get, or every real estate investor should be entitled to get. One thing I could see your tax deduction possibly affecting you if you have all losses and you cannot prove that you are a profitable business. But I think that's more of a question for your accountant for you to coordinate. But I'm not sure. I'm not entirely sure what your question is coming from. It shouldn't impact your approval odds. So 1099, I mean, there are a ton of 1099s out there. There's a 1099 interest, 1099 miscellaneous. Some contractors get paid with a 1099, and that's not necessarily a deduction. So I think that's more of a question for an accountant. Every time you meet with an accountant, when you're about to file your taxes, or even throughout the year, you should sit down with them or her or him, depending on how big your team of accountants are. You might want to pop the question here and there that at the time of filing, you want to make sure you appear lendable to the bank, because maybe you're planning to buy real estate this year, maybe you're planning to buy your primary residence this year, so you want to make sure that you on paper look like someone who is profitable and that you can go ahead and improve your chances of getting approved for a mortgage. But right from the get-go, it's very difficult for me to answer that question, because every business has the right to claim their deductions, to claim their operating costs as a way to reduce your taxable income, so that way you can become profitable. So I think the question goes beyond what I can answer, because I'm not an accountant myself. I do have the answers to some questions, because I just reach out to my accountant and I ask her. But that's more of an accounting question. So apologies if I didn't get a chance to fully or completely answer that. But I will make sure I can leave you a link down below to a couple of accounting videos, not accounting videos, but tax related videos that I've created in the past. I've actually interviewed my accountant, and last year she appeared in 2 of the episodes of my channel, so I'll definitely refer those to you so you can check them out. This is the last question. It's already 1 o'clock, so I have Danilo. What percentage would you allocate to cash, business expenses, investments, and an emergency account? Danilo, I think I already answered that question. It will highly depend on your financial situation. The golden rule, what most experts recommend, is usually 10%. But if you can afford to put more away, please feel free to do so. In terms of mortgages, what banks recommend, or what banks usually require you to do at time of closing, is that you have at least 1 to 3 months of reserve. So that way you can cover any mortgage payment in the event that a tenant moves out, or that something like this happened and maybe your tenants cannot afford to pay the rent and that point in time. So it's already 1 o'clock. I'm going to have to end the call right here. Thank you so much, everyone, for joining. I do have to prep for my next call. For those who are bilingual, once again, feel free to join the call at 1:30 in Nova Rise Latino. And other than that, I will see you guys soon, sometime next month. And I will go ahead and include all the links to the videos that I mentioned, all the links to the articles that I talked about. And happy learning, and stay safe, everybody. Take care. Bye-bye.